guys, and welcome back once again to my YouTube channel. So this is actually episode 2 of this very amazing series that we have begun, where I'm sharing something that I believe it's one of the, not one of the, but actually currently, technically, one of the best actually trading strategy that you can ever encounter so far lately on YouTube, wherever you might search on social media, you can search, but I can safely say it's one of the best due to the amount of researches that I've done, even looking at so many other strategies. I can safely, boldly tell you that this is the best that you can ever come across. So just proceeding with the same analysis, showing you how trades could have been taken all the way as far as 2008, which was 16 years ago, just to prove to you that even most traders who claim to say we have been in the game for 10 years, others they say whatever, just to prove to you that the markets, the way they have been moving, is still the same. What people say markets have changed. Markets haven't technically changed. Things that are changing are people, their awareness of some of the things happening on the markets. Um, and also, like as I spoke yesterday, in the first episode when I told you all that even the volatility of price, that's something that someone can say, the markets have changed. Yet it's not really, there's nothing that is literally changed. So this was where we stopped yesterday. And I say that most of the times when I have my Fibonacci like this and it has hit negative 100%, that's a full complete move according to institutional understanding. When they get to negative 100% like that, it's like the complete cycle, right? Remember, the market moves in cycles. So that's a complete cycle to understand that most of the times, once they've hit that level, most of the times they can give you that deeper pullback before the continuation. That's where mostly, if they're going to pull back, most of the times, uh, if they don't pull back negative 27, don't pull back at negative 61.8, most of the times, the pullback will come from negative 100%. So after they tap negative 100%, if you go to your if I go to my weekly time frame, that's my weekly time frame. Uh, let me just do this. Right, so that's my weekly time frame, right? So on my weekly time frame, remember I told you how you could have caught this simple trade there, or that simple position there. We spoke about that yesterday. We don't want to waste much time on that. I think I also explained the entry point even from a daily perspective, and I showed you how you could have held all these buys all the way into that negative 100% zone up there, of which if you follow structure kept on being bullish, right? Throughout that entire major movement. So that was almost in 2011, getting onto um, preparing for 2012. So still on the daily like that, or even if you want to go to the monthly, if you go to the monthly, the most important thing, like as I spoke yesterday, that the most important details right now on the monthly, the most important detail is me identifying my range, right? Once I identify my range, um, for example, here, this is my current range there, my current buying range, right? So if we break out of this, means we are going to start looking for sales, right? That's according to the monthly. Once I mark my monthly range like that, even if I come back to the lower time frames like this, I'm coming back, but still having an idea of where to focus on. I've seen some people showing some setups whereby they are focusing on zones that are not as important for that particular moment, considering the fact that if that zone is not broken, there's no way that market could go anywhere else. You understand? So here, um, we can already see a shift to the downside, of which that shift, looking at this, just the current market structure there, we can even say that's a leg like that, which is a swing higher high, according to the daily structure that we are seeing that has been playing out lately, right? Once we have a swing higher high like that, here, if you notice, they came back to the same zone, then they shifted again, structure to the downside. So that is a very important thing that has happened, because now they've done it here. They could have went ahead and made their pullback with using one leg, but they didn't do that. So here it's also a very significant zone or significant level whereby those are some of the uncommon change of characters that people they might not be aware of, right? So that one, it's simply making that whole zone a major swing zone. For example, if you notice here, as we were going up throughout this entire movement, there was no change of character that was happening. We're just breaking structure to the upside, we shift structure to the downside, or we induce to the downside, we induce we induce to the downside, which then obviously these are the change of character that someone might say, that was a change of character to the upside. I'm talking about the downside change of character whereby we're changing the overall direction from buying to selling. That one, it never happened. Those ones that were happening to the upside were simply the ones that were in alignment with the structure to go to the upside. So that shift that they literally did there on the daily. Remember, I said my 4 hour, my 8 hour, and even the lower 1 hour, whatever. They if I go there right now, they won't open most of these candles. So right there upon the shift there, that's where the sales could have actually begun, right? You could have actually started selling based on that on that simple idea there. That shift that happened here, this shift that happened there. Obviously, the 4 hour, the 8 hour, even 1 hour, I believe they would have actually shifted earlier. You could have also seen the shift earlier. So this was simply still our first zone of target, because if ever they came here, failed to break it, they're going to just play around, play around. Because when structure is still like that, that they are still that will still be a bullish market. So if they come here and bounce from there, that will still be a bullish market. But now, because they've changed like that, you know that definitely they can now pull back uh onto so yeah, after that level is taken out, obviously your next TP, you're looking forward to the next major zone I'm referring to here. If you look at this, there's a sort of like institutional demand level there that could have also been your TP. If you go to the weekly, I believe you could have also seen something much better. If you go to the weekly, it's much more clearer, because so remember, these levels that I drew were just TP targets, right? Remember, these are not support and the resistances. Just in case someone misinterprets wrongly what I'm trying to say. So that's not support and the resistance. Basically, those are basically Fibonacci levels that we were using as targets. So here on the weekly, they've done the shift, which is clear to the downside. Let me go to the monthly. Monthly, this is still the buying range, right? So we are still in a buying range on the monthly, and so we are still within the range, like here. So you could have even used the bottom of the range as your TP. You could have used even the bottom of the range as a TP like that. So they now gave you a slight pullback to the upside. Remember, and remember now at this point, one thing that we must be aware of at this point is that we've changed our character to the downside, right? Right there. So now it means on the daily, we now actually have some form of bearish structure or bearish order flow that is kicking in, of which going to the monthly, if you go back to the monthly, you can even try by all means to predict what might most likely happen. So on the monthly, what might most likely happen is for the market to break out of that range, that buying range. Once they break out of that buying range, they can give us a potential pullback before a major continuation to the upside. So where our pullback is going to go to, remember, this is an old Fibonacci. This one, they've hit its targets already. So I can as well remove it. These levels, I'll just leave them like that, because now that, according to the daily, what the daily has done, the daily has actually changed character already. So that's a major swing leg according to the monthly. So it means I now have a new Fibonacci now, new Fibonacci like this. And now whenever I'm taking counter trades, remember, if ever you're taking those cells, even if you're taking those cells, and remember now I now have new Fibonacci levels, negative 38%, I mean, not negative. Then I have 50%. I also have 61.8. Right? These are just Fibonacci levels that I'm putting, right? These are not support and resistance, just in case someone misinterprets that. Then we also have 78.6. So most of the times you find a confluence between those Fibonacci levels and certain special important demand levels or institutional zones. There's always, most of the times, based on experience, you always find that correlation whereby you find a very very beautiful Fibonacci retracement level. Uh, correlating or confluencing with a very special demand or whatever. So once I've done like this, I know that once I'm taking those pullback trades, negative 38.2, that's my first TP, right? Even if it's my first TP, if we exceed it, I'll still hold trades further on because now the factors that I look at, the structure shift factors that I look at in order for the market to change, they wouldn't have happened. So if they don't happen, I'll still hold. If they don't happen, I'll still hold. If they don't happen, I'll still hold. So just like that. So that bearish order flow that has begun on the lower time frame is basically the one facilitating the pullback. So these are just some of the ways in which I look at TPs, even when I'm looking at uh counter positions. For example, on the monthly, this is a counter position, right? Obviously, but on the daily, even lower time frames, that's actually a sort of like a bearish, a downtrending moment, major downtrending moment for that pair, for that moment. But of which, when you grow in understanding, you literally it was just merely a what? It was just merely a pullback. 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 So, um, going on further, with my analysis, going back to the daily. As I said, the weekly and the daily, they've already given me that bearish sign to the downside. Here they did it here. They also came back up. They also the same move that happened on the daily, whereby we came down, went up, then we shifted again, we changed. Same thing here, right? Of which they are bearish here. So them being bearish also there. Remember this is 38.2, 50% here, 61.8. This is 78.6. Right? So if you go to the daily, just to show you the main entry levels or the main entry point. So here, as I say, the first TP could have been the bottom of the range, the buying range there, like that. So yeah, to understand that even when they shift here, in as much as you know that's a counter on the daily, but looking at the monthly, that's also still a reasonable buying zone, just considering the fact that they haven't wiped the buying range, or they haven't closed or broken the buying range. So yeah, they tapped this supply area, and after tapping that supply area, they shifted to the downside. So now the those shifts are the only important thing to me. That's the only important factor, right? They shifted down here, came back to the same zone. So even if I entered immediately upon the break, obviously on the lower time frames, H4, H1, H1, H4, there, somewhere there, I could have even entered earlier up there, right? I would have even entered that trade earlier. Here, if I even refine the level, it's literally up there. The correct selling level there was literally around there. So when they did this, come out, even if I entered the cells, even if I entered cells right there, put my stop loss just above. Obviously on the H4, H8, the what you call the stop loss could have actually been lesser, right? The stop loss could have actually been lesser. So that's my breakout structure there. And we're looking at 38.2, which is first 38.2 it's mainly my major TP1 when it comes to what you call this, when it comes to counter positions, right? 38.8.2, which is literally here. It's usually my major TP1 when it comes to counter positions. So yeah, by the time they create this lower high, internal lower highs, lower lows, internal lower highs, lower lows, by the time they get here, already that position that I entered there, it's already on break even. It's already on break even to an extent that even if they don't proceed, just in case they don't proceed, I will still be safe, right? Just in case they don't proceed, I will still be safe. So already, even this one is also a reasonable TP. Also, this one it's also a reasonable TP, right? So the most important thing after those TPs are hit, right, is always for me to go back to my higher time frames, weekly and monthly, to see if ever there's any new information or new data that is of fundamental importance. Because once we have any new data, so here on the monthly we have new data. New data is that we have broken out of our buying range. So the monthly confirming that it has broken out of the buying range is just confirming, also supporting the sales that we're currently in, of which the daily and lower time frames H4, H8 could have literally also given us that clue already that we are what? We are in a bearish trend, or bearish bearish order flow to the downside. So all of those time frames would have told us already those things that the monthly. Remember, the monthly confirms later what the daily and the and the lower time frames would have literally confirmed earlier, right? So they approached this level, and even after approaching this level, they tried to shift, they couldn't shift, they broke there. After they broke, that was a high, that was a low, that was a high, that was a low. Then they sort of like did a shift here. There was a shift here when they took out my low there. When they took out this low, came back again to that same zone. So there was an entry there. By the time they broke below this level, that was actually an entry. You could have seen it clearly, either from the daily, even the lower time frames, H8, H4, H1. Even if I wanted to go to the 30-minute, the same entry would still have been visible. You understand? So yeah, even the counter positions. Let's say I wanted to enter counter positions in this counter buy, right? Still knowing at the back of my mind that now we're in a major retracement sell, but this could have just been a counter position, of which now even the way I split my risk or the way I manage my risk when it comes to counter positions on when it comes to um trending positions, the one that will be in alignment with the overall trend, and the ones that are not in alignment with the overall trend. Even the way I apply my risk, it's so strategic to an extent that I know how to, if I want to go aggressive, if I want to increase my risk, I know a way to do it. I don't just do it anyway, right? So it's all strategic, it's all calculated. So this is how trades could have been taken from that zone. So from this level here, just looking at the daily, obviously someone is looking at this leg here as a TP, of which it's also a reasonable one. The one that I put there is just based on Fibonacci. Remember the um, Fibonacci level that we drew 38.2. So if the market will be moving like this all these days, like here, especially let's say this pullback, all I was doing throughout the days there was to mark my daily high and low. Once I make my daily buying ranges, right? Even if I go down to the lower time frames, even if I decide to go there, right? I'm just aligning my trade setups within those buying ranges. That's why it's not necessary to sell when the market is buying, right? Let's say my high time frames they are buying. It's not necessarily necessary. In as much as someone can scalp sells on a minor time frame, but it's much better, it's much less stressful to scalp trades that are in alignment with the overall direction. Let's say we are bearish, for example, here we're now coming down, right? If someone needed to scalp, which is not even according to my methodology, according to the understanding that I now have on the charts, it's not even, it's to me, it's a crime for me to scalp. It's a crime for me to scalp a move that can be held for days, a move that can be held for a longer time. For me to scalp that move, to me, I feel like it's a crime to myself, not to not to anyone, not to the markets, not to anyone, but to myself, right? To myself, it's literally a crime. It's a crime to myself, right? Not to some of you, but to myself. So yeah, this trade, even if you exited here, obviously, because now the difference between the TP, which was literally here, and also weighted hit, the shift also there could have also given you some clues that potentially we are now giving maybe a possible reversal. So even if you entered those counter buys, remember now, as the market will be moving, as it will be swaying like that, it sways in an orderly way, obviously, but still respecting structure, still respecting the principles of structure, the principles of order flow, etc., etc. So here they came back to that highest point. They never took it out, which was the previous. I can say, with looking at this uh, order flow that is currently moving at, that was sort of like a lower high situation there, of which they are still yet to come and check this out, even on the weekly. So when they came and wiped that level on the weekly, all you just needed to do in this case was just maybe wait for the wiping or just wait for the structure shift to the downside. So here they came, they didn't shift anything here. They broke to the upside. Then here they broke, then they took out that. So there, that was our entry point. This was the daily confirmation. And on the H4, H8, H1, lower time frames, etc., they could have literally confirmed even earlier those cells up there. That obviously the daily was just going to be a further confirmation or further confluence. So right here on this zone, someone could have also decided to take counter buys. Is it wrong? No, it's not wrong. It's not wrong to take counter positions, especially if you know your ranges. So in this particular moment, if you go to the weekly, right? If you go to the weekly zone, weekly time frame, I mean, we now have bearish market structure, right? Of which the monthly, if you go to the monthly, we now have a new range, obviously, right? And our new range is now a selling range, right? In this case, our selling range, we're literally looking at the previous, we're literally looking at the current major low, which is this one, and the previous highs, which were literally up here. So this was basically, this is all, according to the monthly, this is all a selling range. So that being a monthly selling range, selling range, even if I go to the weekly time frame, right? I'm just identifying my major setups within that range. So if you notice, even the what do you call this, even the where all our structure, all our lower highs, they're all pegged within that range, right? Same thing with this one, it's also now a level. So even if you were going to take counter buys, right? You're taking counter buys, obviously knowing that that's an extreme level. Obviously, due to extended understanding, you are knowing that we are coming potentially for this supply area or this order block up there potentially, right? So knowing all those things, if I go back to the daily like this, right? So going to the daily like this, once we shift up there, it's actually an entry opportunity. So remember, I told you that even this counter, you could have taken them, obviously. Here, you could have just bought into that supply area. That was the most valid, the most valid reason of this, of targeting or identifying targets on this particular level, was basically the idea that we have a supply area that was untapped up there. So here, this was the shift. They shifted up here. They came back in this zone. Even if you bought here, put your stop loss here, you were still safe. They came back again here. They shifted again. You could have bought there. Even when they came back again, they shifted again. So there were so many opportunities or many shiftings that literally happened there. So you were targeting that supply area there, somewhere around there for that counter. Then for the continuation, you're just continuing the overall trend, right? Overall direction or overall trend where we are headed, which is in this case to the downside. Let me just do something like this, just to show that it's still a selling range like that. So there, my stop loss just here, right? By the time they now create this new levels, new lows, new highs, new lows, new highs, whatever, to the downside, already that initial position, even after a day or two, it would literally now be safe. Those initial positions that you would have ended up, they will literally be safe because we would have left that zone long back. Even if the market, let's say it potentially comes back to that zone, right? Of which, even before it comes back, they would have seen the signs that is coming there, using our higher time frame ideas and using our higher time frame ranges. Once we have our higher time frame ranges, definitely there is nothing that will ever happen without our awareness. There is no, I always tell people boldly that there is no major move that will ever happen on the charts currently. Now, so long I'm still alive, there is no major move that will happen on the charts without my awareness. It seems like a statement of, uh, it seems like an egoistic statement to someone. Obviously, other people, they are offended, obviously, when someone openly expresses their boldness without any limitation. Other people, they feel intimidated, etc. That's not our problem. But the main point is there's no major move that will ever happen on the charts without my awareness. So on the weekly, obviously, they shifted later. After they shifted later on the weekly, the shift on the weekly, it was actually, I can say, in this box here. That was where the shift. So them breaking out of that box, they created a new law here, which was here. So that was all a selling range. This was all a selling range. So even if you could have marked your range like that, when you go lower to daily, and even the lower time frames, when they give you that pullback inside this range, so long as it's inside that range, you are safe. So even this shift here, you knew that on the daily, they were never going to come and take us out up there, right? That's one thing that you were supposed to know. So also another thing on the daily, you can also introduce some legs, some structure legs, obviously, within that overall bearish coming down to the downside. They come down also in form of some structural form, etc., etc. So every point where they turn, for example, here, that was the 10, that was an internal lower low. There they turned, that was a lower high. So that was the shift there. You would have also entered more cells there, even if you missed those first ones. These ones you could have also entered them. And here they came lower low, gave you a pullback here, shifted here. You would have sold stop loss above. They came back again. They shifted again. So there, That was now your new lower high. You could have taken sales there. So already now, because the weekly is confirmed also, even the monthly also, this is all a selling range. Oh, at the back of your mind, you know that we are targeting to come to this major low of that range or the bottom of the range. Obviously, there is also 38.2, which is here. All of that were thought processes that you were supposed to be having throughout that entire moment to the downside. So even as the market will be moving on certain days, you're not confused. You have your major levels in place. One of the biggest things that I've seen making people to be unprofitable in trading is chasing the markets, chasing the markets. You think there are people who chase the markets every single day. When you do like that, you keep chasing them and they'll keep running away from you. You don't need to necessarily chase the markets. It's wiser, it's less stressful for you to, for example, yeah, you know that we're in a bearish range. If I enter my initial sales up there, then here structure was still bearish, structure was still bearish. So here when they came here, that's why they sort of like did a structure, a mini structure to the upside, of which I know that using obviously the weekly, even if you go to the weekly, that daily shift to the upside on the weekly is not necessarily a shift, but it was just a pullback moment, right? And after that pullback moment, it ended right here. So I knew still at the back of my mind that overall we are still going. So even those trades, there was no reason to exit them because the main idea is to come from that. This is still a swing internal lower high, right? So from a swing internal lower high, you always target those previous major lows. So there was no reason to exit those sales, right? So the only thing was just to see how far this retracement continued up until this zone. So there was also an opportunity for more sales. If I enter more sales there, so those are my entire thought process when I'm entering these trades is once I enter there, right, and we are still bearish, then we have this obviously that was actually more sales there. Structure was still bearish. So even inside here, even if I came back, let's say I just wanted to add more more trades, right, on other minor levels or minor zones or minor ranges within my day to day, you just do the same idea whereby you mark your daily range. Once I mark my daily range, I just go to the lower time frames. H1 going lower there. My trades are done within that range. I know it's a bearish range, especially when you're in the box like this, right? Then even here, when you break out of it, we know that this is just a continuation of our bearish ranges. So even if you come the next day, you just mark your bearish range, you identify your bearish range. Even when you go to lower time frames, 15-minute H1, whatever, you are trading within a range like that. So even here, let's say I come this day, I mark my range like this. Here, if you notice, they didn't break out of the range. It's a bearish range, yes. So it means even on the lower time frames, there were slight opportunities, slight buy short-term opportunities, of which even if you decided to take them, or let's say you ignored them, if you took them, okay, it's also fine, but that's not the entire floor where we are heading. We're heading towards the downside. So the buys are not necessarily necessary there. So here the main thing is to identify this. So there, once you get at the top of our range, you are mainly focusing on sales, 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 sales. You take those sales on the lower time frame. You continue, you join others. Then here, that was just a new structure that was now coming. So there are so many opportunities that you always find of entries, so many. So yeah, I'm just marking the major points where I was going to scale in more of the buys as well as protect. So yeah, once you create this new level, all the trades that I entered up there, I protect their stop loss above here, of which that's no longer a stop loss, it's actually a profit point. So once you get and create this new level, that one and this one, all those trades, we can even protect them above there. Once we go, we go, we go. As we go, we go, we go, create another point like that one. Because overall, I know where we're headed, right? That's the beauty of it. I know where we are headed. There's no confusion to say, are we going down or up? I know, right? I will be knowing where we're headed. So looking at our targets, looking at our TP targets, as I said that we are looking at 38.2. Obviously, once you see it breaking 38.2, you always look out for the next, which was actually 50%, of which if you go back to the weekly, let's go back to the daily actually. If you go back to the daily, even if you scale after taking out that swing lower, major swing lower here, structure remained bearish, you would have even kept on holding up until even here when it's now started to give you those buy pullbacks to the upside. So that was how trades are supposed to be taken there. Nothing even confusing, nothing confusing. There's no action that will ever do on the lower time frame that is like there's nothing that the market will do on a lower time frame that will be in contradiction to what's happening on the higher time frame. You think it's a contradiction because you don't know what's happening on the higher time frame. That's why you feel like it's a contradiction. There is no contradiction. They're all saying they're all in agreement. They're all in agreement. So even here, when they gave this minor pullback, came back to this level, this was also a short-term opportunity here. That was an opportunity actually, not a short term, but actually an opportunity. Looking at the fact that if you go to the weekly or even the monthly, right? On the weekly, I believe you would have even seen it better. On the weekly, we have done structure shift to the downside, right? We came obviously for pullbacks, blah blah blah. But overall, even if you look at this whole range, that's a lower high, that's a lower low, right? This is how institutions think. Just in case you think there's a lot of structure involved there. There's no crazy structure involved there. They are still looking at this as this is our major high, that's our major low, like that. So all of this structure that is involved here, they're just looking at it as one candle up, one candle down. So yeah, there was the breakout candle, then here we just continued. So to an extent that when they're even after breaking out of that, all you do, you just focus on your selling range here. For example, here our next selling range now, if you're marking according to the weekly, it was literally here. That was your selling range. And you know that once you break out of that range, obviously you have TP targets according to the Fibonacci legs that I gave you. Even if you go to the monthly, right? Even if you go to the monthly time frame, the monthly time frame was also in agreement to some of these things. Right? We broke out with that candle, obviously. We now have the next candle like that. So on the weekly, that's where you would have marked your selling range, which was this one. And then you go to the daily. If you go to the daily, once we shift up there, once we come to this level here and we shift here, that's a continuation of ourselves to the downside, of which we have TP targets already that we placed based on Fibonacci understanding, whatever. So there you would have taken sales there, stop loss above. Obviously, H4, H8, even H1, you would have even gotten a smaller stop loss. In that particular case. So from there, you're targeting the bottom of the range, which is literally here. Where's your first target? From there, after we break that, you're looking forward to your next major Fibonacci level, which was literally here. So even if you follow structure, that's where they actually started to decide to turn around here. So already you can see that they were still bearish. Structure was still bearish. Structure was still maintaining that bearish order flow to the downside. They were still maintaining those bearish order flow to the downside. So going back to the weekly, we have almost tapped, I think we've tapped 50%, and also close. We are almost nearer to 61.8. They almost touched it, which is not a problem, but it's actually also a good thing because you know that if they almost touch the major Fibonacci level like that, you definitely know that it's actually giving you or preparing you for those major continuation trades to the upside, right? Especially once they start coming to these deeper Fibonacci levels, 61.8, 78.6, whatever. So even here, the idea is still one and the same. Even if, like, for example, I marked my lower high, my lower low, my lower low here, even if you go back to the daily, right? The most important thing, even if you start on the monthly, right, of which you can even start there. If you start on the monthly, this selling range, they actually broke out of it, okay, which is good. So where is our next range here? Our next range is literally our next selling range is literally right there, that lower high and this lower low. So this is all a range, right? So once you mark like that, when I go to the weekly, if you realize there's no contradiction between what's happening there and even what's happening on the daily, there is no contradiction. So by the time they create this lower low, obviously using also the daily time frame, on the weekly here, obviously you can see that the shift to the downside, the next other shift literally happened around here to the downside. which was here, we could have taken sales, official on the daily and even lower time frames. That shift could have even up. You could have seen it earlier. In this case, you could have seen it up there like this. That's what it happened on the daily. Official, it was actually at the top of our, at the top. They came to the top of a selling range. The top of the selling range on the monthly, it was literally up there. That's why they dropped from that. That's why they dropped from that level. That's why they didn't close above that level. They closed above that level. It was either going to be just a fake out, because even on the daily structure, this is still a bearish order flow market or a bearish market structure. So right there on that zone, that was where you could have even taken continuation sells. Even here, even if you decided to take counter buys, right? Remember, you're actually aware that this is at the bottom of your range. If you're at the bottom of your range like this, even if you buy at the bottom of that range, you are buying knowing that this is a counter buy. Number one. Number two, you know you're taking a counter position, and you also know that there are levels where you're not even expecting the market to go above. For example, you're not expecting them to close above that. Was a day done that was maybe going to be the end of our major pullback, because remember, this is still a major pullback according to the monthly. So there, that was actually an entry point. From there, you're targeting them to come out of that range. So most people, they get confused by structures that they'll see forming inside. That was a break there. After that break, here there was no shift. So here, that was where the shift was. And this was also another break. Those are just legs that were being introduced. If I mark these legs like this and I go to the weekly, you see that structure was still bearish. Structure was still bearish. Most of you get confused. You don't think maybe structure is bullish or whatever. If you go to weekly, you realize that we're still bearish. So this was our high, that was our low. We broke out of the low, we created a new low. So this was all a pullback. All a pullback. And most people, they get confused thinking that, hey, the market has changed to the upside. Changed the way the market is still bearish. The market was still bearish there. So even if you marked that selling range, marking the high there and this low, if you mark the high and this low, obviously they're going to break out. They broke out here. After they broke out like that, if you mark that high here, we broke here and we broke and created a new low around here. So this was all a selling range on the weekly. So even if you go to the daily, even if you go down to H4, H8, you know that my sales, they are going to happen within this range. So even if they introduce new structure, obviously, the lower you go, the more structure you will see. The lower you go, the more structure you see. But that structure is not in contradiction to the higher time frame major structure or the straightforward structure that you'll be seeing. It won't be in contradiction. So there were so many opportunities for entries there. That one also. So throughout here, you're just marking your daily ranges, and you're just trading on your lower time frames using those daily ranges. Even throughout here, once you shift there, you're just focusing on your daily selling ranges. You could have joined in those sales using those ranges. So up until the major leg was hit, which was actually down there like that. The major TP down there at the bottom of our range, up until they hit it like that. So once they hit it, oh, that's actually a lot of money. Trust me, it's a lot of money on gold, considering that this is gold that we're talking about here. This is literally gold that we are talking about. So looking at the weekly, they came to this level and they shifted up. So this is actually giving us a hint of a possible 10, a possible turning from that zone, a possible turning from that zone, a possible turning point from that zone, right? That is if obviously on the daily and other time frames, that is if also this structure level is obviously taken out. If they take it out like this, then we know that we are headed towards there, right? That's what I'm seeing on the weekly. Then on the monthly, right? On the monthly, obviously this is still a bearish range, right? That's why I said, considering the fact that those conditions are met whereby we break out outside of it up there. Once we break outside of it, once we break outside of this selling range on the monthly, we are now bullish, targeting 0% as our first TP, negative 27, 2, TP2, TP3 up there, TP4 up there, like that, just like that, just like the way we did, targeting negative 100% as the ultimate end of that cycle. So once they break above there, it will basically be buys. But if they don't, definitely they will still sell, maybe to some levels down there. But so going back to the daily and the weekly, um, they came back to the bottom of our range, like as I said. Then they gave you some structure shifts to the upside here. Obviously, the first shift was an internal shift. There was a sub-internal shift as well as an internal shift here. That was an internal shift. Sub-internally, they'd shifted here. You could have actually taken those initial buys there. Then as you go, if you mark your daily ranges or your daily buy ranges, you realize that they're just maintaining daily buying ranges there, which you could have actually still held trades based on that idea. So holding trades based on that idea, you are still going to realize profitability. You are still going to realize. So here, someone could have targeted that, right? But once just if structure shifts to the downside, there is nothing that you can do but literally conform to that idea, or just adjust or be flexible using that idea. So here they literally turned right here. So them turning right here, knowing at the fact that in the monthly we are still in a bearish range. But here there's also this level that has been taken out to the upside. So on the daily, they're giving you also new data that can potentially also sort of like tell us that we might be actually heading for the upside, right? Of which, in as much as you be having those factors, you still also, so this trade, according to the daily, according to that moment, you can even safely say it's a counter, possible counter, right? Possible counter. You can also include the weekly. Let's see the weekly. On the weekly, they've also done an internal shift there to the upside. So the pullback, obviously, you know that they'll be coming for demand areas like that they'll be wanting to tap before they continue flying. All of those things are things that you'll be knowing, you understand? So entering that sale, you're entering it knowing at the back of your mind that I'm entering a potential pullback. Potentially, I'm just entering a pullback, not really a major trade, but a pullback, right? Of which that pullback, it's only valid within this whole range. So that was how it went about. If you go to the weekly, there's interesting data that can even help you. If you go back to the weekly, we have shifted up and we started coming down. So as we are coming down, we're also introducing our selling ranges. This was the selling range to the downside. They broke out of it, then they broke outside. So even during that selling range, there were sales that were available, continuation sales that were available even as we were coming down. For example, at the top of the range around here, you would have gotten sales around here as well. I can also see some other sales. All of those were sales that were actually available in that wholesaling range. So those shifts were just opportunities for sales. So here, when they came now and gave me this other shift outside of my range, I could have even exited my buys, my sales, I mean. So even exiting my buys, my sales from there, there is nothing wrong because I still know that we now have potentially new structure, of which if you add a new Fibonacci here from the bottom to that top, they've touched 61.8 of that whole entire pullback. Potentially, also after that shift to the upside, my stop loss just below here. Potentially, obviously, you'll be targeting that, right? But ultimately, you're targeting obviously the break outside of the range, and majorly you're actually anticipating up there. That will be your major TB, of which they go there in form of order flow. They still go there in form of order flow, right? In form of order flow, etc., etc. So the good part is when they do these structure shifts, you can literally see them before they even happen, right? You can literally see those structure shifts before they happen to understand that even here, even if I didn't hold, for example, here, right? Wait, for example, here, I I was projecting there, but here you can see that structure shifted here, of which that structure shift was actually a heads up to exit that sell position that I was holding, right? That was just a heads up there. So this was just like sort of like a range, and they broke out of that range. So the only time they were going to maintain buys was if ever they maintain that buying range to the upside. Of which they didn't, they broke out of it to the downside. Even if you go to the weekly, I feel like there's data that is still supporting that whole entire idea. So even on the weekly, remember what I said, coming from the monthly, that on the monthly, we never changed our bearish range. Take note of this, right? Then I said on the weekly and the daily, there are levels that they must check out. For example, on the weekly, you can see that's a leg down and that's a leg up. They came down, they didn't break. So them not breaking here, even if they play around inside here, they can still break to the downside because they are still bearish, right? That's why I said for major buys, looking at the weekly, they will have to come and check out this, right? Of which, before they even get to take out that, they'll also introduce those turning points, or those signs will always be there, whereby when they are turning. So yeah, throughout. So looking at the daily, as I said, you would have sold there. Where else could you have sold? Was on the daily, they haven't broken out of that level leg down there. So other sales that were available, you could have sold there, you could have sold there. Even if you bought here, targeting some of these highs, you could have still made money. But now, to prove to you that they are never going to sustain that shift, if ever they were going to break this level, they were going to maintain those highs and lows, or those bullish ranges, they were going to maintain them. But the fact that they didn't maintain them, it's giving you some data. I feel like another reason also why most traders they are still experiencing challenges, especially trading wise, is whereby you fight the data that the market will be giving you. For example, let's say the markets, like, they gave me this data whereby they never shifted there. Already they're giving me information that maybe I might have been ignoring. Let's say you ignore the fact that on the monthly we haven't broken out of our major bearish range. Let's say you neglected that fact. So you neglecting that fact, it simply means that you might actually make some certain decisions using the lower time frames that the higher time frames won't be in agreement with. You always need to make sure that your lower time frame decisions that you do, they are always in alignment with that higher time frame idea that is there. Because if you oppose the higher time frame, the market will even tell you, the markets are always talking every time, every single time. The markets are always talking. So they literally went all the way and hit 61.8. So if you go to the weekly, if you extended and went to the weekly, so yeah, even if you were still in sales, waiting for that break, right? If you could have marked even the selling range, the updated selling range here was this one, like this, up there. They were actually selling opportunities there. Go back to the daily, up there, like here, that was actually a selling opportunity by the shift. Downside shift there, you could have literally taken a sell straight up from there. Straight up from there. Obviously, H4, you could have shifted earlier, H1 as well. From there, obviously, you're targeting this, but obviously, there was a Fibonacci level there. And also, even if you use the law of the principle of structure, this trade, you would have even held it further to that, looking at the fact that that's where structure shifted to the upside. So that upside shift could have also given you some buys. Once they shift like that, like here, they shifted here, I could have bought literally around here, marking the bullish range. In this case, the bullish range was literally here. So throughout there, going to lower time frames inside there, you could have gotten this buy entry. So by the time they shift like that, for the short term, on the weekly, you know that that's not necessarily a shift, because on the weekly, you still have new data, or you still have a new range that you'll be looking at. So if they now come and break your weekly range, your new range, that's when you know that our sales are no longer important, or our sales are no longer valid. So all of the things that I'm talking about are things that are essential when I'm looking at the charts, when I'm observing price on the charts, right? So this is still a selling range, and now it's a buying range due to the fact that, number one, we shifted here. As I said, you would have taken buys there. If you follow structure well, if you go to the weekly and even the monthly, starting on the monthly, if you go to the monthly, if you go to the monthly, there's something interesting from where it started falling there. The highs were not being taken out, they're all being maintained. And here we took out this high. Potentially, this can now be the point, or the major reversal point that they can use. They can even use this as the major reversal point to continue to the upside because of that data there. But obviously, you go to the lower time frames to get further clarity on that idea, right? So on the weekly, we are still bullish. We are still bearish here, right? Looking at this, we're still bearish, but here we started turning bullish. So that turning bullish there, that was actually signs that you were just supposed to look at, signs that were available at your disposal. So here, initially, you would have caught these buys, then they came back for a pullback. Earlier on the lower time frames, they could have literally shifted earlier on this zone. You would have seen that shift right here like that. So these are all opportunities, all buying opportunities that were available. And already that was giving you the, so all the signs there were all visible, signs that we are potentially now uh, introducing bullish structure. They were all available. They were all available. Here, that was the shift. And upon the shift there, you could have entered there. Stop loss below. First TP is there. Second one, you're looking at that next Fibonacci level, of which, if you look at it from a major point perspective, you're literally also anticipating them to come out of that overall, what do you call this, overall range that we established previously. All of those things are things that we also consider, right? So even if they don't come all the way there like that, signs that they reversed, like for example here, they gave you sign that they reversed here, up there, like here, sign that they were now turning, they actually presented it there, which means on that zone, you could have literally what? Because remember, this actually appears like a change of character to the upside, right? Of which here we have not been having any change of character. The last change of character that I showed you was up there when we started selling. And this is now a change of character. Potentially, this can actually be our swing higher low. That's a swing higher high. Potentially, because of that change of character, that will be our swing higher low. Potentially, that's where we can have, remember also, based on what has happened on the monthly. That information that happened on the monthly is the one now causing those major changes. Any major move that will happen on the markets, it always has a higher time frame backup from those major time frames, weekly, daily, weekly, monthly, daily, whatever. So here we can even say that this was just a pullback, and it's actually appearing like that. That was the lower high, lower low, lower low there, and that was a lower high. This one is a higher high, I mean, because it's higher than this. Obviously, that's where the change of character happened. But overall here, you can see that they were literally bearish. They were bearish here. They gave you that major pullback, continued with the bearish, or the whole bearish. So if you go to the weekly, you definitely see that structure there is not even much. People, they think there's a lot of structure involved there. There's no, it's not even a lot of structure that is involved there. It's just this major leg down, up, down. So from there, it's just a down. So even these minor pullbacks are just minor necessary things that you'll be seeing on the charts, right? So that introduction you would have bought, that initial push, I mean, you would have bought right there. Then there, even if you decided to sell, even if you decided to sell there, I don't think there's anything wrong to the fact that they would have shifted, and also knowing that uh, down there, they will be wanting liquidity. And once they get that liquidity, they will be wanting to tap that liquidity, I mean, down there. So you would have even entered that sell. By the time they break out of these lows like that, you can even protect all these trades. And even throughout the entire time, you're just focusing on the daily bearish range. They maintained up until this zone. When they came to this point here, that's when they started to buy, right? So these were positions that were actually valid for that entire moment. Here you can target that, or you can even target up there, and even up there towards 0%. Officially, remember, as the market will be going up, it won't go up in a straight line. It will always go up respecting order flow, whatever. And here, by the time they create these new highs, already these initial positions that you would have entered, they are safe already. That's the thing about this methodology. They are already safe. For example, here, they didn't maintain my that overall projection. Obviously, they didn't do it, of which there's a reason behind that. If you go to the monthly, there's still a reason behind that, because if you look on the monthly, right? If you look at the whole monthly dynamics here, if you look at the whole monthly dynamics, let me extend this. Let me put this nicely, right? So if you look at this whole dynamics, that was a high. Let me extend this box like this. That's a high and that's a low. All of these is unnecessary. So they still consider this as our lower high, which is the top of this range, and this is our lower low. To say that if we pull back, that's why I say this minor shift. It's a minor shift which can, if ever they were going to break out of they were just supposed to maintain. But if they don't maintain, they will be showing you that that was just a minor shift for that moment, because here, that is still a major selling range like that. So those sales that they introduced there on the daily, that was a good sell that you could have caught from there, right? Look, considering the fact that we are still in a major what? Bearish order flow or bearish range like that. So if I go back to the daily like this, that was a good sell from there, right? Obviously, once they got here, even if you caught this, even if you bought here, that's the advantage now. Even if you bought here, but now the fact is, or the thing is, on the weekly and on the monthly, they are still showing you extra information now. If you look on the weekly, right? On the weekly, as I said, if you look at your major legs on the weekly, we have down, up, down, up. So we expect to make a down, which this is our down, up. So they still, if they were going to break to the upside, they were supposed to maintain even this bullish order flow up until they take out that. So them not maintaining, those are signs of sells. So here, that was the shift. On the weekly, the shift was here, which once you see that shift, you know that you are holding those trades up until they take out this. So all these minor pullbacks that you find along the way, they are pullbacks that will happen within our selling range, within our weekly bearish selling range. So yeah, our weekly bearish selling range, we have this high here. And here, our latest low was literally here, something like this. So that was the selling range, to understand that once they shift up there within that range, you just identify yourself. So yeah, that was the initial sales. So even if you bought, you're buying within this range, that minor buy. And once they shift bearish, the signs will always be there that now we're selling, now we're buying, now we're selling. The signs, it's not something that they do mysteriously. It's something that is so predictable that you can even see it when it's happening. So from there, you're targeting this. Then below, if they're going to touch that, wonderful. If they don't touch that, you can even still use the lower time frame or daily Fibonacci from the top to the bottom. Let's see, where is the bottom? The bottom of this move, from that top, sort of like it's something like this. You can even use this. Then if structure shifts before they get to your TP, there's nothing wrong. You can even exit the positions. The purpose of having those projections like that is just to have that idea, that, or the ability to really maximize on certain moves. That's what you'll be building there. You're building the capacity to maximize on most of these moves. So that was a leg, and that was a leg, and then they shifted here up. After they shifted up, even if you bought here, you're buying, but still knowing that overall we are still bearish. So even if you bought here, you're buying within this bearish range, this major bearish range like this, right? You're buying within that idea, even if you're going to use the monthly, starting from there, wanting to see your new range. If ever there's any new range, if you go to the monthly, you could have actually marked a selling range there, because here they broke out of your selling range and they gave a retracement. They also shifted again bearish. So here your new selling range was literally this high up here, and the low, which was literally here like this. So once I mark my selling range on the monthly, even if the daily comes and does whatever it does, you realize that you always catch these moments and these opportunities, especially this sniper enters from the outside of the range. If they seem like they come outside like that, right? If you combine it with also structural points like that one is a swing, lower high, lower low there, lower high, lower low here, lower high up there, lower low, lower low. So even when they come here, looking at the daily structure, it's a valid sell considering the fact that we are still also bearish. So here, That was also a selling opportunity due to that minor shift, which they sold. By the time they create these new lows, new highs, new lows, already those trades are safe. Then when you see them now shifting again inside that whole moment, it means they're just introducing minor structure within our overall structure. So yeah, we would have still bought. Buying there, you would have also targeted these highs, of which you also have a major selling range, which is this one. So even if you bought there, you're buying, but still knowing at the back of your mind what institutions are trying to do. So there, it was basically a sell there at the top of our range there, at the top of our monthly range. That was a simple sell that you could have caught from there. TP outside of the range and even beyond if you're just going to extend. But if structure changes up there, even before our TP is hit, there's nothing wrong. We can even exit the position. You understand? We can even exit the position even when the major TP is not hit. So yeah, that was also where we would have exited right there. So throughout looking at the whole overall movement from 2011, remember I started in 2008. I went there, then to episode 2, which is the current episode. We started in 2011, and already now we are in 2016. So you can see that for 5 good years, if ever institutions were going to give a report on gold, for 5 years from 2011 to 20 what do you call this, to 2016, for 5 good years they were selling hard. You're obviously having those they maintained major bearish selling ranges, right, on the higher time frames. Obviously you're going to have those minor pullbacks. There were months like that, right? But overall they were selling. Overall they were selling. So even on the minor time frames, on the lower time frames, you realize that there were more major sales than the sales were, like, there were more sales than buys. That's what I mean. So you identifying all the sales, it was a very predictable thing. So now looking at this current state of the market, that's our major lower high in this case is that one. Why is this one not the one? Because it just came here, didn't break here. It did broken here. That was going to be our lower high. So our current lower high according to the daily is that one. So if they give me any shifts here, right, I can even buy. Still knowing that we are bearish, I can even still buy. But also I'm also looking at the major picture now, whereby I now know that, okay, we have done a major pullback on the higher time frames and we've tapped almost major Fibonacci levels there, right? I'm aware of all. So here on the weekly, you can see that they also created this, they also broke out of this range, I mean, this mini range inside there for buys. So that could have also given you those short-term buys. Obviously, when you check them, you are still targeting this around or even below there for the market to really give you, what do you call this? A pullback within that whole range to the downside. So here on this zone, that was where they shifted up. They shifted up here, came back inside, shifted up again here, came back again. So all those trades were opportunities that were just available for entry. So let's say I wanted to enter using this range here. That's high and this low. This was a pullback, and all you do is just to wait for the pullback to end. On the lower time frames, you basically see this shift right here. You basically see it nicely. 4 hour, 1 hour, you definitely see it nicely here. Then you enter there, your stop loss is just below there. Then boom. In this case, still considering the fact that we are still in a pullback, you just hold it maybe to special levels or special fair value gap levels or whatever, or even just follow through structure. If it goes all the way, it doesn't change. It's also good. So observation of structure is another thing that you'll be doing even throughout the holding that you'll be doing. So yeah, if ever you followed and observed even structure, you realize that they maintained bullish order flow. They maintained those bullish ranges. Yeah, that was a bullish range. They maintained, broke out of it, bounced again, kept buying. So they've changed character now. This one now, it now means right here, you can literally realize that was not a change of character. Looking at the fact that here we didn't break, number one. Number two, this was the break. Our real break was this one. So remember the way I was marking my major legs. I said my major leg is that. That's my major high, low, high. My major low is this one. So here, this was not a change of character. That's a fake change of character, of which it comes with understanding to know most of those things. It comes with deeper understanding. So there, that's the real Makoya there. That's the real change of character there, because we broke here, we created that new leg. So that's the real change of character. And now we can boldly tell you that now, due to that change of character, we are now shooting towards the 0% up there. That's the major TP that we are looking forward to now on gold from that point there, right? Even if you go to the monthly for further backup or further confluence, if you go to the monthly, you realize that the monthly there at that point, it literally did something that it didn't do before, right? Inside this range, a day broken, a day after a year, these laws went all the way to break here. That was going to be a change of character, but didn't. Then they came and they broke outside, and they broke outside, created a new range again. And this was the new selling range here. And they've broken out of it. So now we now have some kind of details now that potentially now we are heading towards there now. Potentially that's our potential major turning point to go to the upside. And take note, they have been selling since 2011 up until 2016. That's like 5 solid years of selling. Imagine 5 solid years of selling. All you are doing, go to the monthly, you identify your major monthly range. Once you do that, you go to the weekly and you identify where are we in that whole monthly range. Then you go to the daily, you go to the lower time frames and identify where are we really in terms of that whole range. And you just align your trade setups in that particular in that particular direction or in that particular idea. So if you go here, we've broken outside as I said. So now it means our new range here is this lowest point and that highest point. That's all a buying range, right? According to that monthly situation. So here, that's your swing lower low, internal lower low, obviously. That's a change of character like that. This is our change of character, which is our swing higher low. From there, institutions, their target is is all the way up here. To an extent that even these initial positions that they entered from down here, they can even hold them to that, right? That's position trading now. That one is deeper than swing trading, right? Even here, even if you followed the principles of order flow, you're still going to hold these buys further. If you held them there and here you held them again up until they change character. Even after they change character, if you mark your daily ranges, that are still a daily buying range. So when they still maintain those daily buying ranges, that's also giving you room to still hold onto those buys that you could have entered, even other buys that you could have joined in along the way. Right. So that was all buying and buying and buying, and that was a major change of character, which is a major shift of direction to go to the upside, right? Like that. Then you play. Once you get a proper shift to the downside, you know that that's potentially a pullback. Once you get a proper shift to the downside, you know that that's a pullback. You'll be knowing that that's a pullback. And if they don't, they'll definitely keep buying and buying. For example, here, if you look at this zone here, or that block, or that what do you call this range here, they literally broke outside of the range, came back inside, then they literally kept on buying and buying and buying. So now the most important thing now, if you go to the weekly, or if you go to the monthly actually. So on the monthly, right, you are still in buys, or you could have entered buys, is to identify if ever there's any new range that is now being introduced. Because if you can't identify that, if you can't identify any new range, it means you'll be having a problem, right? Of knowing exactly the level. So yeah, they were still bullish even on the weekly. They were still bullish even here when they created that new high. They were still bullish as well. So all of these were buying opportunities right here and right there. If you go to the daily and lower time frame, you realize that there were buys that are available for you on those levels there. Right here on this zone, which is the bottom of this range. So if you go to the weekly, it's actually something like this. That's the bottom of our range. That's the top of our range. We came back to the bottom. We just swept, but we didn't necessarily broke below. So there on the daily, upon the shift inside, that was a buy. Even here, when they shifted up here, that was a buy, 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 buy again there on the shifts. There you would have bought like this, TP may be here, of which it was hit. Then even if you decided to take those sales, we are still taking them, still knowing that we are still bullish. We are still bullish though. We are still bullish even if you took those sales. Still profit at the end of the day. There are still profit. Upon the shift to the downside, you're taking that. Still knowing your range. That was the bottom of the range. They shift again to the upside there. That was an entry straight away like this. Top of the range. And also looking at other tips, even if you followed structure, bullish structure, you could have still held this buy even all the way to there. So all of those things are things that if ever you're not informed, you won't know these things. If ever you're not fully informed, you won't know these things. So for today, I'm going to stop here. In 2016 August, I started in 2011 August. So 2016 August, that's like 5 years later. 5 years later, 5 years, they literally gave a major pullback to the downside. Then now they've changed character, which is now just bullish order flow. You focusing on bullish order flow up until we attack the 0% up there. So next episode, which is going to be episode 3, I'll be showing you how we maneuvered from this lowest point in 2016 up until we took out that 0% level there. And I'll even go and proceed further to see if ever we have hit negative 27, where the market current is currently now. So guys, thank you for being here. Make sure you're subscribed to the channel because we are going to go deeper and deeper and deeper. Make sure you like the video, share the video, make sure you comment, make sure you're part of my community. The links to my communities are in the description below. You can't afford to not know these things. So guys, that's it. See you in episode 3.